Hey guys, how's it going? Today is July 10th. It is a Tuesday, and this morning we took a trade, so like always, we're going to analyze it. You'll see over here I was in at 9:54 this morning, out at 10:08. I was trading one options contract on SPY, the S&P 500. I was trading the 278 strike price. Contracts were expiring tomorrow on the 11th. I was on the put side, and what's this? You'll see I bought the contract for 55 cents and sold it for 45 cents. Now what does that mean? Well, not to insult your intelligence, but that is a loss. There's a $10 loss. It comes out to about 18%, and what can I say? I was wrong this morning. And that's just the cost of trading the stock market, the cost of doing business. So let's take a look at the daily chart to provide some context. Alright, so what we're looking at here is the daily chart on the SPY S&P 500. And what you'll notice is I've highlighted sort of this consolidation period where we had some sideways movement, and now we've sort of broken out of that and we're making strides towards new highs. And what does that mean? Well, the stock has some room to run, or it had some room to run. You can see that the previous high was right sort of almost where we're at that 279.50 mark, and that was sort of where we were approaching today. But what's significant on the chart to notice is these large gaps. The stock gapped up quite a bit between yesterday and today, and also 2 days ago and the day before, and that's pretty important to note. So let's take a peek at the chart I was looking at while I made the trade. So now we're looking at the 5-minute chart, and this is what I had pulled up on my phone when I got into the trade and when I was managing it. So you'll see over here I was in on this green circle and I was out on this red circle. And you may be saying, well, the stock went up. How come you didn't make any money? Well, I'm trading an options contract betting against SPY, but that's a different topic for a different video. So let's talk about why I got into the trade. So you'll see this morning we sort of started with a indecision candle on the 5-minute. Sort of bobbled around and then came down hard with this pretty powerful red candle here. Right through the 50 and both the 10 and 20 EMAs. We came down hard, and then we developed this sort of really tall wick on this candle here, which was telling me, hey, there's a bunch of sellers up here that don't want shares and are just starting to get rid of them. So I was like, hey, let's get in on the put side. We'll ride the contract down to about the strike price of 278, which somewhat coincided with the 200 period on the 5-minute chart. Things looked good. The 10 EMA had just crossed to the downside on the 1020, the 1020 cross. And I was in on this candle. We just had a nice powerful break through it and a pretty big wick here. And that was my entry. So I put my phone down and sort of did some work, and when I looked back at it, I had seen this pretty powerful green candle in the opposite direction, and that was sort of alarming to me. So I sort of put work aside for a second and said it's time for me to pay attention to the trade, manage it with my full attention, and not let this thing get out of hand. So during this big green candle, the EMA crossover happened to the upside, so that kind of put me on high alert. But the next candle that had formed was another really tall wick, which again told me that there's still a bunch of sellers that don't want shares, and this thing could potentially keep riding down. So I waited, I sort of kept watching, and then this candle developed, and this is sort of where I said, alright, enough's enough, I have to get out of this thing. We opened, came down a little bit, gave me a little bit of hope. I don't know if hope's the right word, but I was like, okay, this thing might turn around into my direction. But then, like you can tell from the story of a candle, it went all the way up and made highs of 278.75. And this is where I said enough is enough. I set a limit order to get out because I knew it would probably pull back again. And I was out for a small $10 loss in this red circle. And yeah, that's all there was to it. I knew I had to get out, and I was watching for a good exit. I didn't want to give away money and leave money on the table by just selling up here. I knew that this sort of 278.75, because it's such a distinguished 25-cent increment, it would probably either bounce off of it or just bust right through. So depending on what happened, I was sort of not willing to get out here and waited for that bounce down to sort of pay myself a little bit and not take such a big hit. So what could I have done in hindsight? Well, if you look over here, you'll see that this low is pretty much where I got in, and this represents an area of support, and you'll see we bounced pretty nicely off of it. So maybe instead of being so sure about getting in at this exact moment, I should have waited and seen how it played off of this 278.20 mark, and that would have informed my decision to either play with caution or even look at the other side of things and buy a call here, in which case I would have been, green on the day. But, this is hindsight trading. We don't have 20/20 vision in real time, so, it is what it is. This is the small loss I took today, and what I could have done to mitigate that was possibly pay more attention to this significant point here at 278.20 as a level of support and not bought into it on the wrong side. So if you've experienced something similar, then it's important to talk about it and sort of manage your losses so that they don't get out of hand. This small loss will not blow up my account. If I keep taking small losses, it's not going to blow up my account because my winners in general are larger than my losers because I know when to cut them. I'm not saying I'm perfect 100% of the time. However, I'm proud of this one because I didn't let it get out of hand, and that's something we can all sort of strive to do. So if you like the video, feel free to give it a thumbs up. If you have any questions about what I'm talking about, leave them in the comments section, or if you just have any comments in general, just leave them down there. And if you like this content, be sure to subscribe. There will definitely be more on the way.